Is the price above all of these key points, or is it below these key points? Are we breaking to the upside, or are we breaking down? Having that full situational awareness is what allows us to play the market successfully and to trade successfully.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to another episode of Talking Trades. Of course, we have Kevin Wadsworth and myself, Patrick Karim. And guys, this is going to be a great one today. Kevin's going to give you a crash course on technical analysis, one-stop shop. Watch this and you'll be leaps ahead of where you probably are right now there. No pressure, Kev.
No pressure at all. Thanks, Pat. Okay, well, I'll try and squeeze as much as I can into 8 minutes. And I'll start by sharing my screen, and we're going to use the gold chart for this. We're back in 2011. I'm about to hit the replay button on this, but we just have to imagine that we're back in 2011, and you're invested in the gold market, and everything's going great, and people are saying that gold is going to $3,000. Okay, how does technical analysis help you in that sort of euphoric situation? Well, the very first thing you can do is draw a couple of support lines on the chart. There's one here. But then you see the price is moving away from that support line, and we have a new support line, which is here. So the gold bull market has been going on for 10 years, and the rate of acceleration is increasing. So your awareness should be heightened because you're now looking for a breakdown. Gold bull markets tend to last several years, but they tend not to last several decades before you roll over into a multi-year bear market. So you should be looking for reasons to exit. Number of ways of calculating an exit point. You can do all sorts of techniques based on measured moves, distances from moving averages, all that type of stuff. And if I just show you one measured move coming out of that base, that was your first target right there at $700. So TA instantly helps you identify your first target, which is right there at $700. Okay, brilliant. That's your first target reached. After reaching that target, price accelerated upwards and moved up to around about $1,000 before retesting that level. Now, on that retest, given the weight of evidence from supplementary charts, it was possible to say that we were still in a gold bull market, but it probably wasn't an evidence-based return to a gold bull market until we got above that second red line that I just marked on the chart. So you could have tried to get back into the trade if you wanted to on that back test, but the more evidence-based entry is in fact on the breakout of that solid red line that's higher up. And then we moved into a bull market move that continued for many months. Now, if I put on some indicators on this chart, I can put on, for example, the 3-year moving average and the Ichimoku cloud. Now, bull markets occur above the moving averages and the Ichimoku cloud. Okay, and bear markets occur below them. Let's just press the play button on the chart and see what we might have decided to do had we been back in 2011, and how technical analysis helps you. So what you're looking for here, remember, is a reason not to be in the market. Now, so far, it's just bouncing on the 12-month moving average, and there probably isn't too much to worry about. But as price now begins to trade sideways, you've got reasons to be very, very cautious here. The pattern has changed. A very strong move upwards has clearly ended, and you're forming some kind of new consolidation pattern. And already you can see we've got a support line right in there. Okay. Now, for me, if that support line breaks, and bear in mind that the 12-month moving average, the red line, is now starting to level off. So for me, we are now below the 12-month moving average and testing horizontal support. If that horizontal support fails, step aside. That's what the technical analysis tells you. Just step aside and wait for the correction or consolidation to play out. Now, if you add in additional evidence, which comes in the form of Fibonacci targets, that comes in the form of cycle analysis, that comes in the form of analysis of gold versus the SPX. All of these other pieces of additional evidence are telling you that something is happening up here that should be turning you much, much more cautious and should be sending a signal that the bull market may be coming to a close. So what's happening now? If we press the play button, okay, everyone's getting excited again. Gold's returning to its bull market, and everyone's ready for $3,000 gold. And then it fails. That's another signal, by the way, the fact that it failed to break out above that level. Okay, it didn't break out, and now it's broken down badly. So if you didn't exit on that breakdown candle, then you're not using technical analysis. I'll just pause it for a second. See that breakdown candle, that first red candle that pierces the horizontal red line, you've broken below it. There is absolutely no reason whatsoever to be in the gold market at this point. At $1,500, you should be well clear of the gold market. You should be, stepping aside, letting it play out. And if we press the play button, not only did it fall another $500 from there down towards $1,000, but the entire corrective phase took years to play out. So your money would have been tied up in gold when it could have been in other things. And now, of course, we've got cryptocurrencies with Bitcoin, for example, tracking the stock market. So, and of course, with Kinesis, when gold isn't doing well, you can look at putting your investments in something that tracks the stock market, like, for example, Bitcoin. So no reason to be holding gold or trading gold at this point. You can just step aside, move into cash, move into cryptocurrencies, whatever your choice is. But you see this is playing out for a number of years. Of course, over decades, if you're talking about a very, very long time frame, then you can have your money in gold over very long time frames with the assurance that over the decades, your gold's purchasing power will not be affected in an adverse way as it is with the US dollar. You can guarantee with the US dollar that your purchasing power is just going to decrease, of course. But with gold, over the decades, that's not the case. And it's a sound, very long-term investment. But what's happening here now is that we're below the Ichimoku cloud. We've been below the moving average. And now the price is starting to try to move to the upside. And at this point in time, I was drawing this type of a pattern and suggesting that we were likely forming some sort of cup pattern, some sort of arc that would take us back towards the $2,000 level. And of course, over time, the price moved up above the moving averages. You can see it doing that now. And what we want to see is the price moving above the Ichimoku cloud. And it would be great if the price retests the arc pattern, retests this cup pattern. And the patterns, they build out over time. They morph over time. You can see how that has actually gone down below the edge of the arc. So what we need to do is just slightly tweak the chart to accommodate the latest price action. And this is all about having a flexible mindset, realizing that as a chart builds out, the lines that I put on the chart, they're subjective, but the objective analysis comes from things like the moving averages and the Ichimoku cloud, because they're not put on the chart by me. They're put on the chart by the mathematics and the statistics. So you can see we're now above the moving average, above the Ichimoku cloud, and we're trending back towards that $2,000 target. We said at the time that $2,000, $1,900, $2,000 area was the target. And we also said at the time that some sort of corrective pattern was going to form over here, and that it would probably take 2 or 3 years to form. And that's because a cyclical low was coming up. So you've hit a major high point here. Distance is very stretched from the moving average. You can see how far the price is above the 3-year moving average. And then the price came back. It formed a consolidation pattern within that orange box that I've just drawn. And then, of course, as we now know, the price accelerated beyond $2,000 and on up to $3,500. So using technical analysis and observing where the moving averages are and observing where the Ichimoku cloud is and having a situational awareness, is the price above all of these key points, or is it below these key points? Are we breaking to the upside, or are we breaking down? Having that full situational awareness is what allows us to play the market successfully and to trade successfully. And as you can see here, price is testing the Ichimoku cloud. It's just bouncing off it. There's no major breakdown into a bear market there, because we remained above the Ichimoku cloud and very quickly recovered above the moving averages. So we had the cyclical low. The next thing that we said was that the price was going to break out above that $2,000 level. We were in a bull market. This level here is going to be broken to the upside with a high degree of confidence. We can say with a high degree of confidence now, because of all the supporting evidence, that the gold price is going to go upwards through that red line, not downwards and crashing down through the cloud. And of course, as we now know, that's exactly what happened. The price broke to the upside and brought us to where we are now, which is $3,500. So, Pat, that's how you use technical analysis. In a nutshell, I'll stop sharing my screen. In a nutshell, it's support lines, resistance lines, where are the moving averages, where's the Ichimoku cloud, and look at that peripheral evidence. And that's why technical analysis works. It works because all of the traders and all of the algorithms that are trading and investing are looking at the same chart. And when you cross the threshold, it brings in more buying, or if you're breaking down, it brings in more selling. And that's how the chart builds over time.
That was awesome. That was mesmerizing. I love watching the replay there. It's like, wow, it's like magic. Guys, I hope you enjoyed that demonstration by Kevin. Make sure to like, subscribe, and never miss any one of these awesome episodes.